So let's bring up a longer term picture because I like to start on the longer term so we can kind of get an idea of what's going on. So I'm going to go out to a daily chart. And the first one I'm going to bring up is the GBP US dollar. And even before I go out there, I'll just show you a 5-minute chart. So you can see I talked about maybe being active today, lots of economic data today. Well, obviously this morning we had a huge move up in the pound versus the US dollar in reaction maybe to equity markets, in reaction to what the Bank of England said, in reaction to what their neighbors, the ECB, said. So that's the fundamental data that you've got to review and be on top of so that you're not caught trading in the middle of that without a plan, without understanding what fundamental data. Because let's face it, this is a huge move. 60.36 up to almost 61 even, and that happened in a 15 or 20 minute span. So it could have been a result of an announcement or the equity opening in the U.S., whatever it may be. It's your job to do your analysis. So let's draw some trend lines. As you can see, the pound has been kind of steadily moving up on this daily chart. Over the past year, it's kind of been going, starting in the lower left and finishing in the upper right. So it's an uptrend. The pound generally has been stronger than the U.S. dollar. And so I want to just get some guideline and see if I can just draw some trend lines and connect some points. So here I go right here. And now here's the point of trend lines. The more... I'm just looking at questions while I'm doing this, so that's why I'm pausing. Is there 5 days in the week or 6 for IBFX? They go by 6, so you have Sunday evening when the markets open up in the U.S., so Monday if you're in the Far East, and then they go all the way through Friday afternoon, so that's IBFX. But again, if you have questions on specific brokers, make sure that you do your due diligence and reach out. Remember, brokers survive because you trade there, and you trade successfully. That's why they're providing education, and they want to be there to answer your questions, so make sure you reach out to them. If they're not answering your questions, then you may not want to do business with them. It really is a personal choice as far as how they are working and relating with you. So look at this trend line. The more points a trend line touches and the longer it's been in place, the more valid it is, the more traders that see it. Now, I'm not saying that a 5-minute intraday trader on that 5-minute chart is going to use this, but think about it. If you're aware of the bigger picture and you're aware of the overall trend, a short-term trader can use a long-term moving average. A short-term trader can use a long-term trend line. All right? So just keep that in mind, that we have a long-term trend line in place moving from lower left to upper right, and it has been providing support over and over and over again. And just yesterday we came down to that area. So here's what I mean by risk reward. If I'm going to take a chance to use this trend line as support, what I can do is I can put my alert to alert me as the price comes down close to it, and I can put my limit order very close to it, and if I get filled, now I'm in. And as you know, some brokers let you use a limit order, but limit doesn't mean you're guaranteed to be filled. There are limit orders turn into market orders, so it's a condition order turning into a market order. So you may get filled somewhere a little bit away from where you plan to, but depending on the speed of the markets, hopefully close. And then you say, my theory is this trend line is going to hold. That's why I want to get in here. So I put my order in, I get filled, and I put my stop somewhere below that trend line. If that trend line is broken, my theory is busted, my support line is busted, I want to get out. So maybe you plan to get in around 60-20, 60-30, whatever it may be, and you put your stop in 50 pips below, 75 pips below, 100 pips below, and if it bounces off like it has in the past, that's your goal. And in the past, every time it hits that trend line, no guarantees of it doing that in the future, but it bounces off. It goes 54.30 up to 57. It goes 54.70 up to 57.20. 55 on up to 57. So now you've got to gauge and say, hey, 100, 150, 200 pips seems reasonable. Here it bounced off at 58.20 and started to climb up 60.20, 61.20, 62. 200 pips, no problem. I see maybe the risk reward showing me that risking 50 pips to 75 pips to 100 is valid because I might be able to make 100 pips, 175 pips, 200 pips. That's the goal of using the trend lines as far as risk reward. If I shrink this down to a shorter term trader, you can see that the trend line does come in right down here on a shorter term chart. So looking at longer term helps you be a shorter term trader and maybe try and buy dips in the pound because it's been bullish overall, and buying dips at a trend line that's been acting as support longer term can help you. We don't have that many pairs in Forex. We're lucky. Stock traders and option traders, they have to look at thousands of entities if they choose to, because that's what's available. And here we have 10, 15 pairs that we can choose from. The majors, the 6 U.S. majors, the euro and the pound, and the Aussie, and the New Zealand dollar, and the Swiss franc, and the Canadian, maybe the U.S. yen. You only have 7 pairs to get really, really intimate with. So that's your watch list, and you should know it very, very well. All right? So that's a look at the pound U.S. dollar and its uptrend longer term. Let's go and take a look at the euro U.S. dollar, the same time frame, daily chart, similar patterns, and I can go ahead and draw this trend line right here. Pretty similar as it came up. Some people, and this is where technical analysis kind of can change, some people might take those tails out there and draw the trend line like that, and that's probably a little bit more. These tails here where it was rejected came back up. So it sold down there and then closed above. Sold down and closed above that trend line. Sold down and closed above that trend line. So I think this trend line that I drew, the second one, is probably a little bit more valid. All right, so I'm going to go ahead and delete these and redraw. I think that this trend line for sure is more valid because it shows this true support line. Even here, rejected. Rejected down here, rejected again. So the euro and the pound showed up to be looking like kind of similar patterns. All right, that's pretty important to see there, that you have 2 regions of the world, the U.S. versus the euro region, the U.S. versus the pound region, and they're looking pretty similar. Maybe you want to draw horizontal trend lines, all right, and you want to look at some resistance because we're up high. Can we find some resistance? So I'm going to delete these and show you now how to draw a horizontal trend line, just right here. That's showing me a bunch of resistance from back in April and all the way through to recent data right here. So what happens when we get back up there? Now your risk reward, you start to build in parameters. You have a support line right here that we bounced off of. If you don't get in here and you see that the range between these 2 support and resistance lines right here, 30.36 at the bottom and 32.87 at the top, and right now we're at 32.20, we're kind of in the middle to the upper third. Is your risk reward good to buy here and have resistance here? Or is your risk reward better to buy on the trend line here, have a small amount of risk because you put your stop below it, and have potential for greater reward? So do you want to play in the middle of the range, or near the bottom of the range, or near the top of the range? Probably buying near the bottom of the range because your risk reward is better, and selling at the top of the range because your risk reward is better. If you get short here, put your stop above that trend line, and if it rolls down, great. If it goes through the trend line, you have a small loss. So that's what we're using trend lines to develop risk reward. All right.